Good afternoon, everybody, and welcome to the Fintech Nexus weekly news show. My name is Peter Renton, Chairman and co-founder of Fintech Nexus. Joined this week, Todd Anderson actually had a baby yesterday. Well, his wife did, to be clear. So he is out of action right now. Everyone's doing well. A beautiful baby boy was born yesterday morning. But in his place, we have our editor, John White. How are you doing, John?
Very well. Thank you for having me back.
My pleasure. And our special guest today, Jonah Crane from the Claris Group. How are you doing, Jonah?
Doing well. Thanks for having me back.
Okay. All right. So let's get right into it. I think the biggest story of the week really was Governor Brainard's discussion or presentation that she gave talking about FedNow. And FedNow was announced several years ago, had a 2023 timeline, and we hadn't really had any idea of whether that timeline was going to be met. Now it looks like it is going to be met. At least the Fed is going to be ready between May and July of next year. And this is basically instant payments, the instant payments via the Fed. Now, we've had the instant payments via the clearinghouse's RTP network for some time, but not every bank is involved in that. And the Fed now will have their own offering. We got two stories on this. So first, let's just talk about the announcement from Governor Brainard. I know that you've been following this stuff at the Claris Group, Jonah. What are your thoughts?
Yeah, well, I think the biggest takeaway is just that the Fed has made concrete progress here and has really set out a timeline or something of a deadline for themselves in terms of actual launch. I think we'll have to see what actual launch means. I think it seems like they're a little farther along in testing and piloting than maybe some folks on the outside believed. And so maybe the launch next year will be a true launch. I think some were speculating that, maybe a launch in 2023 really meant sort of a pilot. So we'll have to see. I think there still seems to be a lot to do. I was most struck by the fact that the Fed really seems focused on getting banks themselves moving in terms of their preparation, and really inviting them in different ways to pilot and test. And they seem to really be urging adoption, which I think is going to be a big question here: is how hard does the Fed push towards adoption of their network? And they seem to be making a pretty hard push.
John?
I was shocked that there was some kind of significant progress marked. And
you have little faith. You have little faith.
Yes, as the resident skeptic of the news team. Having said that, it will be interesting to see just what kind of response this creates among the major players, and if there's going to be, we're going to see some more big announcements for funding for infrastructure partners in this space as they sign partners and get going.
Yeah, that will be interesting to see indeed. So our second story combines with the first story, and this is the American banker saying the Fed wants banks to prepare for FedNow, but many are in no rush. And just to be clear, like RTP, the clearinghouse's already existing running real-time payments network has 18 large banks, 250 small banks. The pilot with FedNow apparently has 120 banks, including US Bank, which it sounds like they might be the largest of the banks in the pilot. We don't know, but because what's going to happen is the Fed's going to have to connect to it, right? And so the banks have to put in some pretty significant IT investment. Many of them have already put in that investment into the RTP network, but this is the Fed, so it's it's going to be interesting to see how much effort banks put in. What are your thoughts, Jonah, on that?
Yeah, I think there will be a core of banks that want to participate, and others who will be in wait and see mode. And the same was true for RTP. From what we know now, it appears that the pricing is going to be quite similar, and so there's not a huge incentive to jump into the FedNow program. And so it'll be interesting to see if either RTP or the Fed decides to change their pricing, and that would provide a pretty big incentive. I think one interesting fact in these stories is, that the Fed is not going to make FedNow interoperable with the clearinghouse's program, and that will present some challenges from an adoption perspective, I think. And it's also sort of interesting for me. Policymakers have made a big deal about the fact that they think stablecoins, for example, should be interoperable, and yet here we're launching the first major public option, if you will, for real-time payments, and it won't be interoperable. So that'll be interesting. But I suspect, again, I was most surprised by the fact that there were that many banks sort of actively participating in testing and piloting 120, and that suggests to me that there is some demand out there. And I think demand from community banks in particular was a large part of why the Fed was focused on this project.
Right. John, any comments?
I'm just curious, the idea that a lot of the smaller banks are going to be doing the wait and see approach, and wondering if that's going to put them at an advantage or a disadvantage. That's what I'm wondering.
That's the big question. If I like, it sounds like if you don't have the IT capabilities, you're going to be. It doesn't sound like it's urgent, right? So I think you're going to launch with. They'll be like they've got 120 banks and apparently some non-banks as well doing the pilot. U.S. bankers said they're going to work. They're working with they're a member of the RTP network. They're also piloting FedNow. They say they're going to try and make them interoperable at US Bank, which I think that'll be interesting, right? If you have some banks that are interoperable and some not, that's going to be a mess in and of itself that'll have to be worked out. But it's a case of some of the community banks. I think it doesn't sound like it's going to hurt them much to wait and see. And but eventually, if these big guys are, if the consumers are suddenly all getting real time payments happening, and that becomes the expectation, then there'll become some pressure. But I don't see that happening for a while. All right, Joni, you agree that the pressure for real time payments is not imminent, or it's not really strong right now?
Yeah, there are some use cases for which real time payments are really important. There are others for which they're not, and so I think there is some upward bound on sort of the demand for true real time payments, and I think if there are options, whether it's at US Bank or otherwise, to have interoperability between the two networks, that what essentially does is give you access to every bank that's on each network, and that's a bigger network, and that can be attractive. And US Bank would be an attractive sort of correspondent partner for banks who are in wait and see mode. So
Right.
that will take the pressure off those banks participating directly if you have a correspondent who can cross both networks. And
of course, we have, as you mentioned it, Jonah, that we have the stable coin development that's not sitting still. And I just actually interviewed on my podcast this week. It'll be out in about 2.5 weeks, 3 weeks. The head of the USDF consortium, Rob Morgan, who used to be with the American Bankers Association, and so he had some really interesting things to say. So there is movement happening all around when it comes to sort of instant settlement and instant payments. So it's going to be a fascinating next 12 months on that topic. So let's move on to Klarna, who reported their results. They are still a private company, but they do report their financials in Sweden, which is their headquarters, and it was ugly. It was not good. So last year, in the first 6 months of the year, they lost 169, or US dollar equivalent of 169 million. This year they lost 581 million. So do the math there. That's like more than 3 times as much as a loss. Revenue grew, though. Revenue grew 24%. The thing that I thought was most interesting in this whole report was defaults. Defaults were up 50% to 272 million US dollar equivalent. So, that's what people are looking out on. It's not an easy business to make profits in. It seems these companies are growing really fast. They've got, you're talking about $1 billion basically of revenue in in a half, not a quarter, a half a year. That's a sizable operation, but nowhere near profitability, it seems. John, what do you think?
The numbers were pretty staggering, and I had to read the story 3 times to fully grasp
Yeah.
Having that large of a network and activity and revenue growth, and to still see that huge of a loss was startling. And I'm just hoping it doesn't put a chill into similar players, and we don't see any kind of contraction of activity.
Right. Jonah?
Yeah, I mean, I think it's tough. I mean, it's a tough environment right now for BNPL generally, right? It's facing pressure from all sides. You have a macro environment where consumers might be pulling back and facing constraints due to inflation, or in the U.S. in particular, stimulus rolling off. And so you mentioned the default rates going up, and we're seeing that across the board, in particular lower end of the credit spectrum for consumers in the U.S. That the default rates are starting to tick up, and not just off of their sort of all-time lows and back towards pre-pandemic norms, but it looks like they're sort of going back above those pre-pandemic levels. So we're in that part of the cycle here, and that's going to be tough on the credit side. The interest rate environment makes it tough on the funding side for the BNPL players. And, Klarna was one of these high growth fintech companies, all of whom are trying to figure out how they, continue to grow without burning too much money. And so they seem to have pulled back their burn rate quite a bit. The losses in the second quarter were a lot less than the losses in the first quarter. And, we'll see if they can continue to grow while pulling back on the investment side. So it's a challenging environment. I think a lot was made of the fact that they raised money at a lower valuation. I think good that they raised money.
Right.
Right. To need it. So we'll see if they can pull through this phase of the cycle.
Yep. Speaking of raising money, we're actually going to talk about a fundraise this week that was reported. This wouldn't have even been a blip on the radar a year ago. It wouldn't have made the top 10 fundraisers, but it really sticks out as the biggest raise of the week that is reported. Alloy. The Alloy is they started off in the risk and identity verification space. They really like all things anti-fraud, basically, and so September last year, they closed $100 million at a $1.35 billion valuation. That's a pretty solid round in a environment that was really conducive to raising money. This year, we don't know when this closed. So it could have been February. It could have been April. We don't know exactly when. It was announced this week. They raised $52 million at a $1.55 billion valuation. So not a flat round, but an up round. And that is, I think, an impressive feat. Actually, the CEO, they were in Denver last week for FinTech DevCon. I actually chatted with Tommy, the CEO there, over a beer, and he was obviously very bullish about his business, and I can certainly see why. They seem to be doing great. They've got many big names in fintech as clients, and really just I think seem to be executing really well. And we now have an up round by a fintech company. Who'd have thunk it?
Well,
John?
When that story came up in the feed, I actually had to double check the date.
Right.
What year was that?
Make sure it wasn't sort of republished from like February or something.
Yeah, exactly. And I guess it's not surprising with, going through all of our news sources every morning. We've seen the variety of fraud-related stories and hacks, and I'm sure that's piqued a lot of interest in the average C-suite. So this isn't that surprising, but I guess the thing that surprised me was that they've already, reading through that story we're linking to, they still have a lot of money in the stocking. So I was a bit shocked.
Yep.
And impressed.
Yep.
Yeah, it's a good story. I mean, I've known Tommy and Laura since they were, I think they had 6 people in the FinTech Innovation Lab in New York when I mentored them like 6 years ago. So it's been a great story to watch, and I think they really built a great business, proven themselves out in the fintech space. They've got big bank clients now. They've expanded from sort of ID and verification into fraud, and there's plenty of other growth opportunities. And I suspect that that's what the capital raise is all about, is how to capitalize on those growth opportunities.
Yep. Yep, indeed. It's just good to see that. Again, this is infrastructure. The fintech infrastructure is still, I mean, that's the one sector that seems to be doing the best in these challenging times. So, anyway, let's move on. We are now going to talk about an op-ed that we published this week from your company, Jonah, and it's all about this. The interpretive rule from the CFPB that was from it's like 3 weeks ago now, talking about potential CFPB oversight of. It's all about digital advertisers, and obviously lots of fintechs are digital advertisers, and there's all sorts of. They're going to be the CFPB are going to overseeing anyone who's doing who's advertising online, and it's going to be a lot of the fintechs are not ready for this yet. So, Jonah, this came out of your company. What are your thoughts?
Yeah, well, shout out to my amazing colleagues, Lauren and Sienna, who put this piece out. It's a great example of an area where, people are trying to bring practices from the broader tech sector into financial services and realizing that it doesn't always translate that well. And I think a lot of the digital marketing tactics are a prime example of that, where you really want to get as precise as you can in targeting your ads, for example. And there are real limits in financial services about how and on what basis you can do that. And a lot of the tools that have been made available historically through a lot of the ad platforms, sort of most famously Facebook, allowed you to target on the basis of factors like race, which you're really not supposed to do in financial services. So I think there's been a bit of a learning curve. I think it was interesting to see the CFPB actually come out with an interpretive rule here. They didn't necessarily need to, but I think what they were looking to do was, adopt a rule that made it a little bit more clear just who was going to be in scope in terms of being a service provider to financial institutions from a marketing perspective. And as my colleagues point out in their piece, the CFPB sort of named and shamed big tech in their release, but this is really applicable to anybody who's engaged in digital marketing efforts on behalf of financial services companies. So a lot of people need to be paying attention to this.
Mm-hmm. Mm-hmm.
It's interesting. We've seen a few companies talk about their email marketing getting essentially blocked by their provider, and one in particular who used MailChimp essentially as a reaction to how they were targeting it and what they were saying in their messaging. So I think that should send a pretty good scare through most companies who are reliant upon that to drive a lot of their engagement and growth.
Mm-hmm, mm-hmm. Yeah, that was in the crypto space, which caused a huge uproar, obviously, in for many of the, let's say, the libertarian crypto folks. So anyway, let's move on then to a crypto. We haven't had a crypto story yet, so we've gone 5 stories with we had peripheral mentions of crypto, but now we've got a meaty one from the Wall Street Journal this week about Tether. I mean, Tether is just so interesting to me. They've been promising an audit of their holdings since 2017, 5 years ago, because this is the largest stable coin by capitalization or market value in the world. UST, right, or USDT? Can't remember. I should know that, but I can't remember the token symbol off the top of my head. But it's Tether, and it is a big deal. And they have not ever given an audit, and they've given these sort of what do they call them, assessments or something, and they have, no one really knows. Apparently they have $5.6 billion as of last week of digital tokens. Got no idea. That could be anything. Could be Celsius tokens, or could be Luna. We just don't know. So they are now they're promising that it's going to happen soon, not as fast as they want apparently, but I don't know what they're waiting for. I just feel like it's just, when you've got USDC circles, which is very transparent about their holdings, and you've got Tether that is really not. I know that maybe it all will be revealed and everything's above board. But boy, they've got I think they've really got a lot of they just. I feel I don't trust them. That's my personal. I shouldn't editorialize on a news show, but
you said what we were both thinking. So
yeah, that's my perspective.
Yeah, it's quite odd. I mean, what is the holdup here is just a gigantic question.
Yeah.
It really shouldn't be that hard to get an audit. If it's hard to get an auditor to sign off on it, that's a problem.
That's a signal in and of itself.
If it's hard for the auditor to actually conduct the audit, that's a problem. I mean, this should be pretty easy at the end of the day. And so I think it is an issue. And I may have mentioned this on previous podcasts I've done with you, but I continue to be surprised by the degree to which large chunks of the industry rely on Tether, and it may just be that they're locked in at this point and feel like they have to use it until we sort of fully transitioned out of it in some respect. But it's really still a critical cog in the machine for a lot of platforms and so forth. So we'll have to see where it goes. But I agree. I think I suspect over time there will be pressure, certainly in the U.S., to move away from something like Tether as a sort of critical node in the infrastructure, if you will.
Yeah, I should point out it's USDT that is the symbol for Tether, not UST. I think that was like Terra Luna or something. But anyway, or Terra. So, John.
I do have to give kudos to the Wall Street Journal for the best subhead of the week, which was Tether needs an audit that's akin to a corporate colonoscopy, which could explain their reluctance to go through with it. So, and as they say about colonoscopies, the prep is the hardest part. So
yes.
That is akin to what they're experiencing there.
Having done that once myself, I can attest to that, and I put it off. I put it off multiple years, but Tether should be on board, really. Okay, let's move on. Interesting one that I didn't see this. I'm sure you've probably been following this, Jonah, but California has passed the Digital Financial Assets Law. It hasn't been signed yet by Governor Newsom, so it's not officially law yet. And it's sort of, some people say it's the California equivalent of the New York's BIT license. And the one thing that's interesting, and it's not going to come into effect for us until January of 2025. So we've got some companies have some time to react. But the thing that was most interesting to me was that you can only hold stable coins if they've been issued by a bank. And right now, I don't believe any bank is issuing stable coins to my knowledge, but some hope to. Obviously, the USDF consortium, they hope to all be issuing them shortly. But maybe that's why they've chosen January of 2025. But still, this is California putting a stake in the ground. Jonah?
Yeah, I mean, as I read the legislation, it's even broader than stable coins. But at the very least, as you know, it does put a stake in the ground. I mean, I think you can be registered with the California DFPI. It's either be a bank or register with California DFPI, and in that sense, is a lot like a BIT license, which creates a sort of bespoke state level regime. I mean, for what it's worth, there was a lot of concern about the BIT license, but it seems to have been relatively successful. There are something like 30 companies licensed in New York now. Those are licensed crypto companies. Some of those operate with trust company licenses in New York, but the vast majority of those have BIT licenses. So it doesn't seem to have completely impeded progress in New York. I think the biggest challenge there is that DFS is sort of perpetually understaffed. It takes them forever to process the application. So, remains to be seen whether simply registering with California and becoming licensed in California is sort of sufficient to issue a stable coin there, sort of akin to money transmission licensing. And if that's what it amounts to, then I think it makes some sense. I don't exactly want unlicensed companies issuing stable coins, so we'll have to see what it actually means in practice. But my hunch is that it will turn out, if it goes into law and goes into effect, it will turn out not to have been that big a deal. But that's a bit of a leap of faith from where we stand today.
Right.
it mirrors,
only add to that.
pointing out, it mirrors, there are efforts at the federal level to create a federal regulatory regime for stablecoins. And at least as currently reported, a stablecoin issuer, at least of a payment stablecoin, would have to register or become licensed really by the Fed. And so that would effectively preempt all these state regulatory.
Right, exactly. And that in January 2025, I mean, that's 2.5 years away. It's quite likely, I would even say, that there's federal, because stablecoins seem to be the one thing that seems to have the most momentum at the federal level as far as legislation goes. But
That's right.
yeah, so it may become a moot point eventually.
Yeah.
That's exactly where I was going to go, but I was also going to joke that you can have DeFi as long as it's CeFi. Seems to be the skeptics are kind of, their eyebrows are getting sore from being raised so often.
Right. Well, we're going to end with a couple of stories on NFTs, and NFTs. They've sort of had their moments, but there was a lot of hype, and now things have crashed down to earth as far as valuations go. But the technology, I still think, is really interesting, and we've got Ticketmaster coming out this week. An article in TechCrunch talking about Ticketmaster are going to be using the Flow blockchain. That's FLOW. It's by Dapper Labs. Dapper Labs is the company behind NBA Top Shots, which is the NFTs of basketball highlights that have done really well. So I really think that you got events like sports and concerts. These are sort of, I still have somewhere at my home a shoebox full of concert tickets from the 1980s and 90s. And I think it'd be great to have a digital representation of that. And it feels like that's something that, particularly music fans, sports fans are so passionate. I could see them driving adoption here. And there's apparently the Flow was used for the Super Bowl. I didn't realize this. 70,000 attendees at the Super Bowl got an NFT. So it's out there. And I know, John, you're an avid concert goer yourself. What are your thoughts on this?
This is legitimately the first time I saw a story about NFTs and said, "Oh, okay," as opposed to, seriously, why would I want to do that? This is and as I just scored a ticket to Billy Joel in New York next week, so bucket list item checked off. And I could see, if I'm doing a bucket list concert, that's something I'd like to have a memento too that's unique to me. So this is real practical interest for me.
Mm-hmm.
Yeah, I think it's quite interesting, and I think this, Dapper Labs has done a great job of partnering with sports leagues and entertainment to, find, sort of pockets of, really avid fans and dedicated people who are going to be really attracted to something like this. And on their part, the leagues, this seems like a perfect use case to drive sort of affinity and loyalty type programs through. And it is worth noting that the partnerships with, whether it's Ticketmaster, the NFL, the NBA, there is this sort of centralized party behind it all, right? And so you're creating something that has, there's at some level there's value because it's the NBA behind Top Shot, or the NFL behind the Super Bowl ticket, and I like to think that like Jack Dorsey minted an NFT of his first tweet, and that's great, but like I could have done the same thing, but nobody would care, right? Nobody wants to buy an NFT of Jack Dorsey's first tweet that I minted, right? But they want to buy Jack Dorsey's, and I think there's something to that. And I think Dapper Labs has sort of, for now, nailed the formula with their sports leagues and sort of events-driven approach.
Right.
Of course, Ticketmaster will take 30% off the top of that.
They
have been known to do that sort of thing, yes.
But if it prevents, and I think this was mentioned in the story, I mean, if it prevents the secondary market from, exploiting further ticket sales for $2,000, then maybe that's a good thing. So I do think there's something there in the tickets area, and maybe that's a good.
Yeah, and that's the thing. I mean, like now I got tickets to the Broncos game in a couple of weeks, the home opener, and you can't get a paper ticket. You're not allowed to have a paper ticket. Everyone there has to have a electronic ticket, so it's not much of a leap to go from there to an NFT. Anyway, but last story. We've only got like, we're actually over time, but I just want to just touch base on Andreessen. They want to standardize NFTs. They're creating like a Creative Commons license for NFTs, and it's called the Can't Be Evil license. Details are available on GitHub, so maybe we'll see some standardization there. But anyway, we don't have time to chat about that. We are actually over time. So I would like to thank Jonah once again for joining us. John, great as always. And before we go, just a heads up, if you happen to be in London in October, we have our Merge event where we'll be talking about all things Web3. Basically the merge of Web3 and traditional finance. That's where the name comes from. Nothing to do with Ethereum. And then we have our Latin American event in December. So fintechnexus.com for all the details there. With that, we'll be back same time next week. And thank you everybody for watching or for listening. We'll have a great afternoon. See you guys.
Thank you. See you.